In the face of persistent economic uncertainty, the Federal Reserve is grappling with a complex landscape marked by sticky inflation and fluctuating home sales. Recent meeting minutes reveal the Fed's cautious stance on interest rates, highlighting the ongoing challenge of managing inflation and economic risks. Meanwhile, the housing market remains sluggish, with high mortgage rates and limited inventory suppressing sales despite a slight decline in borrowing costs. This multifaceted economic environment raises critical questions about the future trajectory of U.S. monetary policy and the broader economy. Can the Federal Reserve navigate these turbulent waters and achieve its inflation targets without derailing growth? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So, before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. Federal Reserve grapples with persistent economic uncertainty and inflation. The recent Federal Open Market Committee (FOMC) meeting minutes, released 3 weeks after the session, provide a detailed glimpse into the Fed's current economic outlook. The minutes highlight ongoing concerns about inflation and interest rates, painting a picture of an economy that remains under pressure from various fronts. Federal Reserve officials, while acknowledging the need to eventually lower the decades-high Fed funds rate, express a cautious approach due to stubbornly high inflation. Higher for longer has become the mantra as officials grapple with inflation levels that exceed their comfort zone. Chris Zaccarelli, Chief Investment Officer for Independent Advisor Alliance, noted in his analysis of the minutes that although there is a desire to reduce rates, current economic conditions do not permit such a move. The minutes reveal a divided perspective among committee members regarding the root causes of this year's inflation spike. Some members attribute the increases to temporary factors such as adverse weather conditions and volatile prices for gas and certain food products. However, other participants argue that the inflationary trends are more broad-based and should not be easily dismissed. Federal Reserve officials emphasize risk management amid uncertainty. At a recent event, Federal Reserve officials stressed the importance of managing risks and adapting to uncertainty in their ongoing efforts to reduce inflation to the 2% target. Cleveland Federal Reserve Bank President Loretta Mester emphasized the need for several more months of improved inflation data before considering an interest rate cut, pointing out that the first quarter's reports were disappointing. Mester stated, "It's a little too soon to determine where inflation is going," expressing that she expects price pressures to ease, but at a slower pace than initially anticipated. Boston Federal Reserve Bank President Susan Collins highlighted the difficulty in predicting future interest rate changes due to economic uncertainty. Collins urged patience, advising against overreacting to any single set of economic data. Similarly, Atlanta Federal Reserve Bank President Raphael Bostic noted his satisfaction with the current reduction in inflation, given the economy's strength, and emphasized the importance of balanced risk management moving forward. Housing market faces continued challenges. The housing market remains in a state of flux, with existing home sales in April showing a decline and prices continuing to soar. High mortgage rates have significantly dampened home buying activity, with the National Association of Realtors reporting that if homes were sold at April's pace throughout the year, the total would be 4.14 million, a 1.9% decline from March's rate. This figure is also significantly below the long-run average, and much lower than the levels seen in March 2022, when the Federal Reserve began its series of interest rate hikes aimed at curbing inflation. Despite slow sales, home prices have reached record highs. The median price for a home sold in April was $407,600, marking a 5.7% increase from the previous year and the highest median price ever recorded for the month of April. Jay Hawkins, an economist at BMO Capital Markets, contextualized these figures by noting the significant drop from historical averages and the impact of the Fed's anti-inflation measures. Mortgage demand increases amid lower rates. In a slight silver lining for the housing market, Mortgage borrowing costs have decreased for the third consecutive week, leading to a rise in mortgage loan demand. According to data from the Mortgage Brokers Association, the average rate for 30-year mortgages dropped to 7.1% for the week ending May 17, the lowest in nearly 2 months. This decline spurred a 1.9% increase in mortgage applications, with refinancing options, particularly those offered by the Department of Veterans Affairs, driving a 7% increase in refinancing applications. Joel Kahn, MB, a vice president and deputy chief economist, noted that the recent dip in mortgage rates encouraged some borrowers to act, resulting in increased activity across both conventional and government refinance applications. However, he also pointed out that the lack of available houses for sale continues to suppress purchase activity, which saw a decline despite the lower rates. As the Federal Reserve navigates the intricate landscape of economic uncertainty, inflation, and housing market challenges, the path forward remains fraught with complexities. The cautious stance on interest rates, coupled with persistent inflation and a sluggish housing market, underscores the delicate balance the Fed must maintain to steer the economy towards stability. With such an uncertain economic outlook, one must ponder, how will the Federal Reserve's strategies unfold in the coming months? And what impacts will they have on the broader economy and the lives of everyday Americans? Share your thoughts on this critical issue. Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.